Hey, Rent to Retires, it's Adam Schrader here again. Today we're going to talk about how to find a market that makes sense for investment properties. All right, before we get started, I wanted to remind everybody, please subscribe to our YouTube channel, click the notifications bell, make sure that you're getting access to all of the content we're putting out there. We're putting stuff out all the time to make you a smarter, better investor, to make it go as easily as possible so you don't want to miss any of these videos. Also, at the end of the video, if you like it, think it's worth other people watching, please click the like button, leave a comment below if there's anything you want us to talk about in future videos or to address on the podcast that we're putting out 2 times a week. So let's get down to it. When it comes to investment properties, when it comes to investing in real estate in general, one of the most important things to look at is the market itself. You want to make sure you are going into a market that will be viable for rental properties today, tomorrow, and years down the road. So how do you figure that out? Well, there are 3 main things that we're going to talk about today. The first thing we're going to talk about is the population. Now, obviously, when it comes to population, you want to see a steady or a growing population. However, there is an important caveat in this. You cannot simply go and look at the population of a city anymore. You can't just say, I want to invest in Birmingham, Alabama, or Memphis, Tennessee, or Indianapolis. It doesn't quite work like that because, as we saw during the pandemic, with so many people leaving the city and moving to the suburbs, you also have to start looking at what the suburbs have been doing. So go to the census.gov website, look up the different smaller areas around it and see, because you might see some of them that say, hey, it looks like this city's shrinking because the population is going down. But then you look at the suburban areas around it and you see, oh wow, that's more than made up for it in difference. The suburbs are growing 40, 50,000 people and the city itself lost 10,000 people. Well, that's pretty good because, as you know, when people move to a city, they just move to the general area. You could say I live in Houston and still live 30 minutes outside of Houston. So, you got to look at not just the actual downtown inside the city limits population, but also look at all the little suburbs that are around the area as well. The second thing we want to look at is the median income for the area. Look, you're going to vet your tenants. You're going to make sure they have, or your property manager is going to make sure that they are making enough money to pay the rent. But how many are going to be at that level? Well, one of the things you can do is you can look up the median income for the market that you're looking at. You can do it on the Holy Grail. I know it's not scientific or anything, but you can go to Wikipedia and look up the area and see what the median income is. I've compared it to some of the other stats that are out there, and they're usually pretty accurate. So we're close enough to it that you can make a quick estimation. So you take the median income and you look at what rent burdened is considered. And remember, rent burdened is considered 30% or higher of your income going to rent. So you want to take that median income for the area and see if 30% of it can pay your rent. And if so, then you've got a large pool of people who are eligible to be your renter. If it's a smaller one, then you want to see, is the population big enough that there's going to be enough demand for my rental property? So just go check out the median income, make sure that it will support the things that are needed to make your rent. So if it's 3 times your rent, then you need to make sure that they're making that 3 times your rent is going to be inside of their earning potential. Our third thing I want to get into is the industry itself. Now, every market is driven by something different. It can be hospitality, it can be manufacturing, it can be government. There's a whole lot of different things out there. But what you want to look for is the economy that's driven by something that is very hard to move. Now, it doesn't mean it's impossible, because nothing is impossible, as we found out over the years. Look at Detroit. Nobody would have thought that, back in the Great Recession and all of that Detroit would disappear, essentially. And it's coming back, but for a while it disappeared. But you want to look at something that's really hard to move. Manufacturing. That's hard to move. It's not impossible, but it's hard. There have to be a really good reason to pick up and move. Government jobs. Look, if it's a state capital, the government's not going anywhere. Those jobs are going to be in demand. It's going to be a large employer in the area. Is there a large state college there? You know, if, for example, where I live in Austin, it's both the state capital and the University of Texas. The University of Texas employs thousands and thousands of people because it's so huge. Is it a big shipping area? You know, if you're in a port, that's not going anywhere. So you're going to have those jobs. They're not going to be disappearing. Or is it a big transportation hub? Like Memphis is considered one of the transportation hubs in the entire country. They're not going to move the freeways. That's not going to happen. So look and see what is driving the economy in the market you're looking at, and is that at risk of being moved? For example, look at tech. If you're in Silicon Valley, yes, tech is going to be there most likely, but we've seen over the past few years companies fleeing and moving to other areas that are treating it better. You know, that's what Austin has been seeing, the massive influx from California of all the tech people. That is not an industry that's tied to one spot. You can do tech research anywhere in the country, anywhere in the world. But are you just gonna up and move your port? No, that's not going to happen. So make sure the industry is tied to the area and isn't likely to go anywhere, and you will be in a much safer market than looking at places that can just pick up and move on its own. So those are 3 things to remember when looking at a market: population, median income, and industry. I hope this was helpful for you. If it was, please click the like button, let other people know they should have a watch. Again, if there's anything you want us to cover in future videos or on the podcast, type it in the comments below. We will get to it as soon as we possibly can. And don't forget to subscribe to the channel, click the notifications bell, and get educated, because getting educated is the best step you can take other than actually buying a property. You can go to renttoretirement.com, check out all of our inventory, schedule a call with one of our investment counselors, and they can help you find people for your team, find a market, find a property, anything you need on your real estate journey. That's what we're here to help you with. Renttoretirement.com. You can get all of our latest properties sent to your smartphone by PDF. Just go to renttoretirement.com/hotlist, and we'll see you on the next video.